Okay, so good morning. I start again because it looks like we had a trouble on the first start with some screen sharing that was not working. So I start with the DXY as I said. So that's where we are now. We mostly pull back from this trend line. You see, we stopped on a daily base. We have the volume that stopped right on it. It's a very long-term trend line, multi-year trend line from 2010. So it's like 12 years trend line we have. We have a channel, by the way. So we could see a little bit higher, as I said, and that's what I was explaining here. So we have here two very important areas. That's the next area where we would bounce from when we will come back there at 103.20 more or less, this area between 101.72 to 103.20. And that's where I think we'll post the high of the year, which could be already in place, as I said on Twitter. So the 114.50 or 115 will be probably the area where we will stay with the high of the year. We could spike a little bit above it, like a crazy spike to take the last stop or flush before going down. But I think I'm looking now for a pullback, and that would be the first area to look at with this monthly order block. And of course, we see that it's right on these highs here, the bottom of this volume area here. So all this area will be 101.70 to 103.25 will be very important to look at for the pullback. So nothing big changed here. That's what we have. And of course, this is very important, not only for the EURUSD, but for all the USD priced instrument in Forex or even in precious metal like gold and things like this. We will speak about gold in a few minutes. So that's what we have about DXY, which is unchanged since we look at it. Of course, we have the same kind of channel on the EURUSD on the downside, even if it's not starting in 2009, it's starting much after, because this is not a multi-month channel. We could probably draw exactly the same. And if we look inside it, so that's where we are now. We have those inside fib here. So there is different way to draw them, but we see how well they have been working, whatever chart I can look at. So there is a very big influence. If we would break lower for any reason, I don't know what would be the reason, but this area at 0.90 to 0.89 is the big bottom that we won't break. So that's what I have now, and that's absolutely, anyway, the 0.90 has been the target of that huge ABC down since a long time now. So if we look at this chart, for example, which has been the chart we have been using yesterday, or this one, you see the same thing. They are a little bit different because it's different version of ABCs, but we see how the inside fib are working very nicely. And you see how we have been playing in between the weekly and the daily open today. Same thing on the other side. This one is a little bit smaller time frame, so this is a 15-minute time frame. So we have the same thing here. We had this last bounce there inside the US traders waking up, which is not very often in the last days. So we see we have some momentum with us on this side, and we could find anytime, we could see anytime a much bigger push on the upside, sorry. So for today, we have this monthly order block there, the daily open here that has been holding the price together with some fibs we have on the other chart here, the 61.8 extension too. So we have a lot of things there to hold the price in a way or another. If not right now anyway, today, between today and Friday, I expect a real nice bounce on the EURUSD for all the reason I already explained about the US economy starting to show some signal of growth weakening and unemployment increasing due to the hikes. So it's not, I'm not saying they have a bad economy, but I'm saying that the economy in US will be affected by the rate hikes path they have been implementing. They will solve the inflation problem sooner or later, but meanwhile, they are heavily waiting on the growth and on the economy ends. Of course, they started from a very, very good condition of the economy, which was why they were not wondering to hike so hardly. But now they need to start looking at it because there is a lot of convergence of information, data, indexes showing some troubles there. Concerning the EURUSD, so I just show mostly all the information we have with the different inside feed we have. For example, here, everything is converging, and now we can see, as I said, anytime a push to this 96 area mostly. Could be today, could be later, but anyway, we will come back there. And at the same time, we will have the 4-hour 2021 moving average, which is there, that will be waiting for us there. So this is the 4-hour 2021 moving average that we will have at the same time. Can copy it on this chart. So we'll have it at the same time, coming back here around this 50% or a little bit lower if we wait a little bit more to go there. Let me double check. It's well the 4-hour. Yes, it's the 4-hour coming there. So that's what we could have. And concerning the daily, well, if we, the weekly, sorry, if we can really close in this area before the end of the week, we could push up to this 38.2 at 0.99 for the monthly quarterly close. So of course, we won't be above the 103.74. That was one of the targets we had for a close that would post a face breakout on a quarterly basis. So that won't happen. I mean, that doesn't looks likely to happen now, but I think we should break back above the 60% and go up to there probably by the end of month or something like this with a push on the EURUSD. So we have many data today and in the next day, especially today, for example, the consumer index and some financial data of the US, plus a lot of Fed speakers, both ECB, Fed, of course. We have seen Bank of England. Bank of England is speaking about intervening because of the huge weakness of the pound. Of course, when they will do so, as well as the Japanese bank has said they will intervene. So everybody is going to intervene to slow down or to stop or to reduce the problem of the very high USD, which is affecting everybody from the inflation point of view, of course. So when all those guys or will join or will do their action one after the other, that will create some very big aggressive move on the upside for any USD instrument. That's what we have for now. I will do another live update tomorrow or later today. There is something big happening, for example, on the consumer confidence later today, or or the core durable goods in about now 1 hour 30. So we'll see what we have. And remember, in 30 minutes from now, we have Fed Powell speaking from this meeting they have. So that will be another shaking move in about 30 minutes from now. Have a nice trading day, and we'll see each other tomorrow for the morning or midday update. Oh, one thing, sorry, I forget about this, gold. So it's very important because many people have been asking me about gold. I posted these charts, this one and another one. I'm calling on to be long on gold. I explain why. So we see here, for example, on that inside levels of this big 38.2 that I called since 2020. I called this level when we were up there. We went short with my group. We went short in this area till there, bounce from here, were paid once, were paid twice. Then I didn't took this short. I was not looking at it at this time, which was probably a mistake, but that's what I did. Then we saw we came back, bounced a little bit, and then pierced this very important level. So very, very clear picture now. 1,440 would be the lowest target we would get. For that, we would need or to have a big risk off situation, which doesn't look likely with recession coming and everything, or to have a much stronger USD, which would be really very big, because to have a move like this just on the USD strength, it would mean we would have a all-time high on the DXY, which is not likely to happen for me. So we can stop anytime here, and we could post, that's what I think, we could post on a monthly base a phase breakout under the 61.8 here, which is the 1,685 level that I called since September or August 2020. You can find that in my Twitter feed, making an advanced search, you will find it. So that is what I see for gold. Then we have some inside level. I have posted them already. We are playing, as you see, we are playing in between them. Since we came back on this 78.60 fib, it's normally calling for the next one, which is a back test of the 88.6, and then we would break above it, come back to retest it, then we would go for break of the 160.85, 1,685 USD a pound, an ounce of gold. So that's something we have to take in consideration, because that is telling us the same thing about the potential low in place here for the year. That would be very likely, and then we would post this this phase breakout, this phase break under the 160.85 level, which is a very big level we have been looking at. So that's what I just wanted to add for gold. We have some important level to come on the volume point of view here. One is at 160.09. If we would dip a little bit more, we can update that tomorrow when we will have a little bit more information. The last thing, last thing I wanted to discuss, if some are interested, is about the S&P 500. So we have had a bounce, right? Let me find the chart. I wanted to show you this one. We had a bounce yesterday right on the 78.60 fib to the pip with a double bottom. Very nice price action. So that's not yesterday, the 23rd. Then we have a double bottom yesterday. That's what I wanted to say. We had this double bottom, and now we are starting to move up. I would like to see a flush in this area, which would mean a little bit of more risk off before seeing a nice bounce on the end of month, end of quarter. So that would be very nice if we could see this area at 3,635 or so, and then we would fly from it for a nice bounce of several percent on the end of month. But with this price action, if we don't flush the stops under it, we can very well keep on going up. So that's the two scenarios we have in place now for the S&P 500. Thank you for following, and we will be in touch soon with the next updates.